Corporate governance, sometimes also referred to as corporate government, refers to the way companies are managed and how their executives are controlled. Originally, it focused mainly on mechanisms for controlling executives. Indeed, they are the main source of the strategies developed by companies and of the performance or value creation they can generate for their shareholders. However, until the end of the 20th century, the control exercised over executives was rather weak. This could lead to abuses to the detriment of the company and its shareholders. In line with academic work, governance codes, guides to best practices, have been published by professional organizations such as AFEP-MEDEF in France, by stock exchanges, and in some cases have even been partially incorporated into law to ensure that executives act diligently toward their shareholders. The justification for this focus on shareholders stems from on their status as owners of the company, even though this interpretation can be disputed since shareholders own their shares, not the company itself, strictly speaking. This traditional governance has seen significant practical developments and has focused on the board of directors, the emblematic body of governance, as it is the organ that appoints or dismisses executives. Over time, governance standards have evolved to ensure the optimal functioning of the board of directors in fulfilling this role. Independent directors, separation of the roles of chairman and CEO, aligning executive compensation with value creation, specialized committees within the board, and so on. More recently, the concept of governance has evolved. On the one hand, the role of a board of directors is not only to oversee, but also to advise the executives. And by focusing too much on oversight, a sense of mistrust could develop, resulting in less transparency and ultimately lower performance. On the other hand, the focus on shareholders has been fiercely challenged, and there is often a call to include other stakeholders, even if in practice this remains limited. For example, in France, with the presence of employee representatives on the boards of the largest companies. Finally, other governance mechanisms exist to bypass the board of directors if necessary, such as shareholder activism.